Welcome everybody. This is Brandon from Galaxy Doc Market. We're trading alpha, and today is, on this episode, it's going to be Sunday, September 22nd, 2024. It is about approximately 10:45 a.m. as I bring you this important video. Here's the disclaimer. Pause it, read it. If you agree, please move forward. And remember to like and subscribe and comment on my videos. All right, so here's the shameless plug. We are now on X.com. We have been since May. We're putting out a lot of great content, lots of great discussions and breaking news that you may not see on YouTube videos. And then, of course, here's my artwork thumbnail for the week. And this is Market Panic soon. And we have even the bear that is scared about what is coming shortly. And, all of you that are euphoric or basically thinking that I'm a perma bull or a bear, I'm neither. I go with what the market tells me based on the fundamentals and what our esteemed Fed or non-esteemed Fed is doing. Okay, a lot has happened, so we're going to be talking about that. And then this is going to be a critical analysis of where I think things are headed. Yes, we're in a blow-off type of process right now. And the question is, are we going to be hitting the upper trend line, long-term SPX trend line, versus are we going to be selling off soon? And those questions will be answered and to help you with your trading going forward. All right, so, a few weeks ago, I said, hey, bullish stock market in action. And then I showed you this long-term trend, monthly trend of my SPY chart or SPX, which whenever you want to follow. It's the same thing, but I used the SPY. And we're looking for this tag of these upper trend line because these upper trend lines tend to bring in bear markets as well as market crashes. Okay, and I said it's with warning signs. And then we got the FOMC, all important FOMC, out of the way, and they basically, oh boy, they cut a whopping 50 basis points while trying to reassure the markets that the recession is not in the cards and that economy and job growth and their mandate, they're fully aware of it and they're on top of it. And I call BS on that. And this is what this video is all about. Okay, so I'm not going to put too many videos on news on this video. Okay, so not a lot. The war beat is going on strong. The drum is beating louder and louder. And, I don't know if you have heard about this. On September 21st, which was Saturday, yesterday, Israel unleashed something in Lebanon, and everybody said it's a mystery bomb. And if there's some videos floating around, you're going to be able to see that, was that a tactical nuke? Are we ushering in this kind of things now, or what is going on? But regardless, you have to listen to your intuition. You can't listen to what they say. You have to see what they are doing, okay? All bankers, I'm telling you, take you to war, okay? Because that war is very, very profitable going forward, and it likely ushers in new monetary reset system for the world. Most likely in the form of central bank digital currencies. Next thing that happened is that Federal Express. Okay, Federal Express are part of the Dow Transports, and it is a very important leading economic indicator. And they warn, it was a horrific earnings conference call, and they're warning of significant slowdown in shipping and activity, and they've guided full year down, and they're not very optimistic. And henceforth, if the economy was doing great, and if the Fed hikes and have been working, and now they're cutting in panic, they're worried about what the only thing is consumer demand destruction as well as recession, even though they're telling you that is not the case. Okay. Apple flash crashed in the last 30 minutes after getting everybody excited to think that the stock is favored. Folks, people are dumping Apple at the top and you are becoming the exit liquidity. And now what we've got is a situation, if you look at this very carefully, what is this right here? That is a bear flag that is forming with a likely move in the next week or two, continuing to move down further. Okay. And this is the type of things that the market is warning you. And you can go ahead and be super bullish and say that, the Fed's cutting and it's going to go higher because it's going to spur economic activity. That can't be further from the truth. Okay, and we're going to go over why that is. By the way, when was the last time Apple actually innovated anything? iPhone sales demand is decimated. They're offering discounts in China. That is a warning, folks. I mean, does not happen. This is not a fat finger mistake, and this is something that I've been warning you all about. We'll talk about Apple in a bit. And then, of course, 10-year Treasury yield. You would think that cutting 50 basis points and trying to reassure the markets, which I think Fed Powell has absolutely failed at doing. Okay, instead, why is this happening? If you cut the 50 basis points, okay, I know it doesn't happen right away. This is where FOMC cut rates. We are now full on from about the 36, 37 level, and 3603 level. We are now at 3703. Any kindergartner could tell you from this level that we have gone up. In fact, it's making a bull flag, is it not? Here's the bull, here's the flag formation with a likely movement of rates higher. Rates are not going to go down and this happened last time. Folks, pay attention to this in 2008. Again, watch what they do, not what they want you to believe. Don't believe anything mainstream media is telling you right now. Technicals are pointing to more upside in yield. What is that going to do to further business activity, further mortgage, applications and home buying activity, which has spurred on this bubble that's happening? People are tapped out, folks. All right, here's my Galaxy 4, and the Galaxy 4 basically looks at Apple. Here's Meta. It didn't show up pretty well, but Meta is actually the only one that really doing well. This magenta line obviously is my Tesla, and then of course the blue line is my Apple, and they're all flattening out. But here's the one I want you to really pay attention to right here. That's NVIDIA, folks, the darling, the AI, the savior, Nancy Pelosi's very favorite insider trading mechanism. And I shouldn't have said that, but you gotta have some levity here. The other thing is down here is my Dow Industrials, okay? So the top red line is the industrials, and they're moving higher after the earnings, but look what the transports are doing. This type of divergence, folks, is telling you that there is a big significant sell-off coming and the rug pull is coming. It's not going to be, unless some black swan happens, it's not going to be on Monday or Tuesday. It could be any day, but realistically, I'm still looking to see if we're going to tag that upper trend line of the monthly trend line, but fully cognizant that all of the house of cards could be coming down ahead of elections, okay? Now, the powers that be are trying very, very hard, trying to remain apolitical, but you know what this is all about, okay? The party that's in power is going to do everything they can to hold on to power, and if, like I've said this many videos back, it'll be very telling what the market does ahead of elections. If they start selling this market off ahead of elections, they're going to do everything. If Trump gets into the office, I think they're going to sell off the market, okay? But having said that, we'll see what happens. Okay, they're trying to scare that the economy is not failing. Okay, they don't want you to be scared. I said that wrong. They don't want you to be scared that the economy is failing. They want you to think that the Bidenomics is working and that Kamala Harris is your answer to 4 more years of this crap. And but having said that, I think that if Trump wins, and I'm not political in any way, but if Trump does win, I think a big market crash is ahead of us. And I do believe that. Okay. But this is warning of a bigger market moves lower. Okay. So here's the upper trend line updated. We're at 568.25. We were flirting around with 573, 575 level. It would be great if they just tag these levels, right? And just fall off, right? But you can see what happens once you tag that upper trend line. Okay, sell off ensues. Okay, and anytime it came close to these bottom trend lines, recovery ensued all the way down to here. We had another sell-off here, but again, we touched this line and then move higher. And then obviously we've been moving higher since then. We're looking for a breach or a topping process. Okay, so there's two scenarios on this, folks. One scenario is that this comes after the elections, and we're going to get a rip-roaring rally ahead of post-elections into probably February of next year. Or we're going to sell off, and we may not hit that level, leaving the markets open, for a possibility, probably coming down to this level and then going higher, possibility after the elections, if that makes any sense. Okay. Regardless, this 578.5 to 585 top will happen now or after elections. I think if they decide to push it higher, I think we could hit up to 600. Nice even numbers. They like to work that way. All right. This is my expected move calculations based on options pricing, and the market makers on the ES had priced in last week 5787.3 and a down level of 5613. This is an hourly chart, and look at how they breached over and then failed immediately. Folks, if you want to learn more about things like this, you really need to reach out and find out how to become a membership in our group, okay? But regardless, we've sold off, and so this is last week, so I'm waiting for the new calculations to come out, and we will talk about that. But there is extreme weekly and daily breaches of expected moves for the last, couple of weeks, which is usually what happens before a market dislocations occur. What do I mean by that? So here is a live version, and so these green lines, so here's the week one, previous week right here, and then this is this week's. Okay, next week's will come out, and you can see these breaches. Okay, see these red levels. Okay, last week we came all the way back down. The previous week we shot over. In a normal functioning market, you usually have something in between. You don't really have an overshoot, and generally these type of overshoots or undershoots, these levels usually lead to market declines, and it will basically signal to you that those are happening usually a few weeks prior to that. Okay, here's the breaches here, and then as it came, and then we had this sell-off. Okay, so I think there may be like maybe this week, between now and this week and 3 weeks, ahead of the Rosh Hashanah, which we're going to be talking about, we're going to have some form of a massive impulsive sell-off that is coming. Okay, the Fed's history of cutting and pivoting usually leads to that, which leads to about a year to year and a half of a financial crisis that is headed our way, or a geopolitical event. Not sure. Let's talk about the fear and greed index. Okay, we remain at 63 from last week, and we are getting closer to the top because there's really no more bears left. All right. And, people are asking me, how can you be so bearish when everyone's so bullish? That's because of this. It's contrarian. But not only that, people are not extremely fearful at the top. They're fearful and extremely greedy at the top. But you're seeing the dislocations. You're seeing the wobble in the marketplaces. Okay, you're seeing Apple selling off at 30 minutes prior to the end. Federal Express, which is basically a big barometer of economic activity, failing. I can't tell you the countless numbers of other consumer demand destruction plays that we talked about. Dollar Tree. Yes, I screwed up on Restoration Hardware, but they will. They are not being honest about their earnings, and then basically they will believe, the markets will believe for a while. It will be irrational. But Restoration Hardware is something you want to keep an eye on, but that's not what we're talking about right now. Still got me good, though. All right, so I admit that. All right. Signet Jewelers, you still need to pay attention to that. That is a big consumer demand destruction play. People are not getting married, folks, despite what they say. And they could paint all rosy pictures about the fourth quarter being rosy into the shopping season. Folks, people don't get married in December. I'm sorry, or November. Okay, it's a holiday season. It's a time for traveling, although if people have money that they would do that, but they will not be doing that, folks. It is contrarian. Pay attention to this, folks. We're getting very, very close. Remember, you have to build your bearish positions while things are bullish, okay? You either have them or you don't when the move comes, okay? And I'm not advocating that you basically front run with everything that you own, okay? And I'm not even advocating any financial advice at this point, okay? But the fact of the matter is that there are dislocations, and we're going to talk about historical relationships, historical ramifications of what the Fed just did. Cutting 50 basis point is super bearish, folks. Okay. Now, having said that, you've seen this chart before, and I said record high inflation. They're cutting into record high inflation. They're saying that the jobs are healthy, but they're not. They are not healthy. If you just come down to earth and just talk to your neighbors and talk to the people, there's more and more people with 2 or 3 jobs. Nobody really has full-time jobs. They're all working for themselves, or they're out of jobs and they just given up, or they're tapped out on their credit cards. They're tapped out on their home equity loans. All right, they can't even sell their homes at this point because they overpaid in the last couple of years. Okay, there's record high layoffs that are coming. I mean, who in their right mind is believing the Fed when everywhere you turn, people are laying off, or the big box retailers are going bankrupt or closing stores? Cons, for example. WEF, these guys I think they're evil, folks, but I don't give a crap. Okay, they're coming out warning of shock events. They tell you right to your face what's coming. Have you not seen the news about what's going on with Israel and Lebanon just yesterday about that mystery bomb? Okay, what if, I'm not speculating on anything, but that sure looked like something more than a bunker busting bomb. Did you see that mushroom cloud that formed? Okay, that's what they're trying to scare you into, and that is what's probably coming to our way. Japan yen crisis. Okay, Bank of Japan remain steady on their rates, which was expected, right? But they should be hiking rates to fight their inflation and their imploding economic and stock market. Okay, but they're not going to do that because they need this yen carry trade to be alive, and this is not over. Okay. People are forgetting about bank solvency issues, okay? And I think this is what this rate cut was all about. But it's not working, right? The TNX, which is a measure of 10-year Treasury yield, is rising post that. Why is that? Okay? Could it be that the people that still own some of our Treasury bonds, like China and all of those, if they haven't sold it already, are dumping into this? Could it be that Japan, even though they kept their rates lower, they're selling U.S. bonds to basically shore up their yen, okay? Because they don't want to be a carry trade anymore, okay? If you looked at the U.S. dollar, okay, it is a race to zero. And I've said this before, and some of you ridiculed me for saying it. It is in the best interest of the worldly countries, central banks, to basically devalue their currency ahead of everybody else's. You'll see what's happening, okay? And that's what's happening. All right, so they cut rates, and now the Fed pivot happens, okay? And I've been saying painstakingly, telling you what comes next after all this, okay? If you don't believe me, then we had another article that came out. It was on Zero Hedge, I think put out by a guy named Hartnett, all right? And I just took a screenshot of it. I think they explain it a lot better, okay? Sadly, okay, I was still trading, starting my career and really getting traction when long-term capital blew up in 98. I was around for the tech bubble. I've seen all of this, okay? Subprime crisis. Every time they did an outsized cut and told you to your face that everything is fine, that nothing to worry. Subprime, Bernanke in 07. The effects of subprime is largely contained to regional banks, and the economic dislocations have been contained. And then what happened a year later, folks? We went all the way here, and everybody was running for the hills while the elites were buying up these stocks and pennies on the dollar. BlackRock was buying your foreclosed homes for pennies on the dollar. All right, that's how wealth transfer occurs. And of course, we had a cut as a result of what right here in 2020. Now we cut 50 basis points here. All right, do you see what is happening? Are you getting to me, folks? All right, big outsized first rate cuts and pivots almost always invariably leads to crashes, recessions, depressions. Look at 1929 Wall Street crash. They cut. All right. Look at Penn Central bankruptcy. Okay. Penn Central. Okay. That was in New York in 1970s, which led to a really bad, almost depression in New York City. Right. Franklin National bankruptcy. Okay. You don't think bank bankruptcies are coming? It's coming. All right. JP Morgan and Jamie Dimon is warning you about that stuff. All right. Anyways. Fed is always late to the game, folks. All right, just the most recent things: 2000, 2007, 2019. Okay, rate cutting cycles, large cutting cycle. Fed is late to the game. All right, I think they do it on purpose. Okay, they can't be this stupid. Bunch of PhDs can't be this stupid. All right, but they are, because they do it on purpose, and then they take the blame for it, and then laugh all the way to the bank while their top 0.1% earns. It just takes your hard-earned savings, and basically, we bend over and say, "Thank you, sir. May I have another?" Are we going to be doing that? Not in my group. All right. So, what are we going to do then? Another example, okay? In 2007, okay, we started cutting rates, and the market celebrated a little bit, although I don't think we're going to be celebrating for that much. It comes in, and then you Fed panic cuts, and then you start getting panic cuts as the Great Recession comes in. You don't think that the Fed is doing this on purpose, folks? You don't think they blow bubbles? They create economic dislocations and steal your wealth? This is what's happening, okay? You can pause this. You can watch this video that I made. I know my videos are long, so people probably don't want to watch it, but I think you should. Okay, you should go back and watch 3 weeks worth of my video. Get some Maylocks and XLax ready, because it's going to make you vomit. Okay, gold. Let's talk about gold. Okay, and I'm going to start this way, and we're going to start into our technical analysis. I talked about this about a week and a half to 2 weeks ago. Way back when I said, back here, critical pullback zone, you should be buying gold right here. We've basically gone into my 4-phase parabolic process. We broke out at this level, and I've put this dotted line way back here when we started breaking out, when it was right here, and I put that question mark. I think we're well on our way. We have basically, the RSI is signaling our strength. We've got a situation where we have increasing buy volumes, okay? It's going to go higher. All right, so let me show you really quickly, real quick technical analysis on gold, because gold is warning you something is coming that's not, the bulls aren't going to like. And then I'll segue into my other technical analysis. And boy, I got to hurry. Okay, so we talked about this move. Okay, I think we're going to hit like 2,700, 2,750 sometime next week. All right. I think if there is a economic dislocation, war, or anything like that happening shortly, I think the gold is going to skyrocket above 2,900. Okay, in a couple of weeks. Okay, everything is telling me that it's moving higher. Okay, MACD super bullish right now, gaining steam. CCI is the only one, but at these extreme levels, contrarian, right? We still have room to move up higher. Okay, we'll watch that very, very carefully. Yes, gold's not going to go up in a straight line, but you can bet your bottom dollars. I think there's something going on, maybe with Japan, maybe with Lebanon. Maybe that was a nuclear bomb that was used. I don't know, okay, in Israel versus Hezbollah. Okay, stochastics breaking out right here, right? We have on the PPO ADX, it's basically a bullish formation that's forming, right? We talked about this. Okay, that's what's happening. All right. Accumulation is occurring. And of course, on the ATR level, we're at the top end of the range. If we start moving down, I believe we're going to start moving much, much higher shortly. All right, so let's get into really what I think about 10-year treasury yield. Okay, the TNX basically formed a bottom right here. We're moving higher. We need to break above this descending trend line, and then it'll start to move higher into the 39.40. Do you know what's going to happen? Even if we just pop a little bit above to the 38s, the whole market's going to come down unraveling. Okay, we have some strength in the RSI. We have a MACD that is positive on both the histogram and the signal. We have the CCI coming down now from the bottom and moving higher. Okay, we have the stochastics moving higher. We have the PPO ADX that is bullish. We have ATR at the bottom end of the range, which means that we're ready for an upside move. Again, a trend change is coming, folks. NVDA. Oops, not that one. Okay, not NVIDIA, but SPY. Sorry. All right, I just read whatever's on there. SPY likely is forming a topping pattern right now. We have from the previous highs a decline in relative strength. This is a loss of momentum situation that is going on. All of these levels that I have here, folks, you can pause it. Eventually, we're going to hit those levels, okay? It could be tomorrow. No, not tomorrow. Just kidding. It could be, we'll hit some of those levels before the elections. I'm pretty sure of it. All right. Look at the MACD. Okay, look at everything that is diverging as we're moving higher. PPO-ADX is going to form this, probably eventually one of these. The bottom channel is forming on the ADX. PPO just needs a little more work. Okay, but this is what happens when things get manipulated to a point of non-recognition. At this point, we have accumulation distribution that is at the top. We'll probably start moving lower as we come here. And then, of course, PPO-ADX, either we go down or up, it doesn't matter. Directional change is coming. Okay, so this was the daily. Okay, on the weekly, it's even worse because we have declining RSI as we make all-time highs, breaking out of that critical level. The question I have is, are we going to hit that upper trend line before we come down, or are we going to sell off and then have a rip your face off rally after the elections? Okay, and I think that's probably the schematic, but I'd like it to hit that upper trend line. I think we may inch higher. It's possible, or we start failing here or just chopping sideways before moving lower. Okay, but regardless, the critical level at this point is this level right here. We're looking at this 561 to 560, 559 level. If those levels breach on a daily basis and we start getting in volume, guys, the sell-off is coming, okay? And then you can look forward to all of these, okay? I'm not going to go too much detail into that. I do want to talk about VIX, all right? We have calls on VIX, okay? And I think VIX with these blue line can come down into the 100-day moving average. Maybe I would like to see it come down to 1478. It means that we're getting closer to that upper trend line that basically is going to usher in a very, very stark sell-off process that is coming, okay? But realistically, we're getting near the bottom. Not financial advice. We're loading up on calls here, okay, on the VIX. Okay, and that's what I would do. Okay, Apple. I generally stay away from it because, the market rigs, the market is basically rigged higher using Apple, NVDA, and the magnificent, what I call my Galaxy 4s or magnificent 7s or whatever you call it. We have a decline in RSI, very, very subtle, but this is a daily chart that we're looking at, by the way. Okay, we have this trend line, and we try to breach above it, and we failed right off of there. Okay, and so the question is that sell-off at the last 30 minutes in Apple something to behold? Is that something that we need to be cognizant about? Okay, so I'm going to start this, and I'm going to show you what I'm talking about. If Apple starts coming down, okay, and they are selling, insiders are selling, we are looking at these levels as the sell-off intensifies. Okay. And that's what I wanted to talk about really quick. So we keep an eye on this Apple, okay? On the weekly, all right, again, we have the declining upper trend line. It cannot break above. We're near the top, okay? Can it try to push higher a little bit more? Maybe, okay? Probably, okay? But we're really targeting. If you guys are paying attention, this is a big void that's been left right here. There's not a lot of structural support here because the volumes have been so lackluster, okay? This huge volume up was not able to move the RSI, folks. That's a divergence that I want you to take a look at, okay? So we did the gold, okay? So the other one that I want to talk to you about is significant because Federal Express has been, and I'm just going to show you this real live, okay, because I haven't really marked it up yet. But we are very bearish on Federal Express because we are bearish on what the Fed can do, all right? Federal Express basically popped the day before, made all these black candles. When you see a lot of these, it doesn't happen right away. It's just telling you that the insiders are selling, okay? And then we were down to here, okay? Is there more downside coming? Of course there is, all right? I think we're going to go way below 240, probably into like 225 level, possibly by next week or the following week, okay? And if the market sell-off happens, then this is going to gain steam. Federal Express is dead, folks. okay? And that it's telling you, warning you, despite what Fed is saying, something is wrong with the economy. I've been harping on this. Watch the video. Sell on Rosh Hashanah and buy on Yom Kippur. We're coming towards the end of the month this week. All right, we got the quad witching out of the way. By the way, the gamma dislocations that are present from this quad witching may extend into Monday and Tuesday, folks. All right, I think there was some like 5.6 trillion notional value that was expiring, and they were all on the bearish side, folks. Think about that for a minute. Rosh Hashanah starts on October 2nd. And Yom Kippur starts on October 11th. I'm not sure if Yom Kippur might produce maybe a few days of rally, maybe. But you short the rips, I think, in my opinion. All right. And I talked about this at the last video. I said, be aware FOMC was September 18th. And rate cut is coming. Will it be bullish enough, though? Okay, so Fed thought by cutting 50 basis points, the markets would celebrate, and it did a little bit. But if you look at the stocks like Apple, you look at stocks like Federal Express, you just look at the stocks in general and the transports and all the divergences that are present. You look at the TNX, you look at the dollar, they are all diverging from each other, warning you that Fed is cutting that much. Why would the Fed cut rates if everything was fine? Okay, that's what I want you to think about. Consumer demand destruction is alive and well, folks, okay? And Federal Express is a reason for that. Federal Express warning, the way they are warning, means that the recession is already here or it's going to be. Yeah, but Fed is just doing everything they can to prevent you from thinking this R word, okay? So in summary, critical stock market warning. This is my warning. Will we hit the upper long-term trend line near 585 to 600? We kept them petering out around 573, right? I thought we were going to hit 575, but we didn't. Will it do it this week? I don't think so. MSI, my McClellan Summation Index, is broken because of all the rigory and the market dislocation, so I don't even talk about it. It is bullish as hell right now as the market is teetering. We're watching closely the Japan, US dollar, the yen carry trade situation. This ain't over, folks. Be vigilant. Sell on Rosh Hashanah and buy on Yom Kippur. I think this is the route we're headed. Okay. This seems likely the most probable market sell-off point. Okay. We may start to sell off, start grinding lower, and then it's going to get impulsive after that date, I believe. Gold is warning you currently at 2647. I think we're going to hit 2700 by midweek or higher. It's warning of a black swan event. Something's broken out there, folks. And why? And you need to ask yourself, why is the TNX rising if the Fed cut 50 basis points? Think about it for a minute. Bottom's not in yet. The big rally is to come after we take out the 49.68 to 48.85 on ES, which may coincide with 486 to 464 on SPY, but that's for later. Let's see if I'm right first. History rhymes. Let it play out. Fed cutting at these levels into inflationary pressures. I showed you that chart from Hartnett. Nothing good's going to come out here. Apple, FDX, NVDA, SMCI is a warning. Did it ring the bell at the top? There's an active discussion going on about SMCI. Are we blowing it out of proportion, or is that the bell at the top? We'll find out shortly. VIX is nearing support, folks. Those calls sound good. Not financial advice, but, Keep note of Fed pivots and cutting cycle. I've been harping on this for weeks now, folks. Okay. Critical SPY level. I think this is what you wanted to see, and I left it till the end. And for those of you that made it all the way through this 30-minute plus, I'm losing my voice. Okay. 561.67. If we breach below there on volume or close below there, there's going to be some sell-off coming. Okay. It will get impulsive. That is a level that if they're going to rescue the market, which they probably will try, is going to be at that level. Watch list. VIX, SPY, ES, SMCI, Apple, Tesla, NVDA, FDX, and gold. We have much more in our membership group, but you have to join to do that. Fed likely has blown another recessionary sell-off cycle, folks. Do not believe what they're doing, okay? Powell is just a mouthpiece, okay, for whoever that is in control. Okay, thank you so much for watching. Make sure to follow me at Galaxy Doc Market, and thank you for all the followers. Like us, share us, and above all, comment, good and bad. I can handle it. And that gives me more ideas as well as to see where you guys are at in terms of your market sentiment. And remember to give me a thumbs up and subscribe and tell your friends, okay? And if you want to learn to work with me, find out at Coach Brandon at protonmail.com. Just send me an email if you want to join the full-on membership group. We do have special pricing where you're going to get my morning market commentaries as well as the weekly watch list. You won't get the exact pivots and all this other stuff. You will get some, but the weekly pivots and things like that. And that's going to be much more affordable. I think a lot of people are asking, and I think we're going to do it. Okay, it's gonna be under, I think, like $100 to join per month. Probably gonna be around like 59. I haven't set the pricing yet, but even those commentaries and my watch lists are gonna be worthwhile. So be on the lookout, or if you want to find out more about it, you want to jump the gun, email me here, Coach Brandon at protonmail.com. Be careful out there. Do not believe what the Fed is saying. No, the bull market is not gonna go on forever. There's some weird crap going on in the world, and you better see it. Thank you very much.